To me, that's like a death sentence for a business. If there's one thing I could give people like a pearl of wisdom here or whatever, because I remember we had this conversation at the time where we were discussing how much working capital to get from the bank. Take as much working capital as you can possibly get.
Welcome to the Before You Buy or Sell a Business podcast, where we help buyers and sellers learn more about the acquisition process, discuss recent transactions, and stay up to date on the latest news in the market. Here's your host, Jared Johnson.
All right, welcome back to Before You Buy or Sell a Business podcast. Today I have somebody that is kind of slowly becoming an SMB celebrity, I guess. Talked at a few conferences. I think next week you're going to be at SM Bash, so I'm glad to have you on here and talk about, the business you bought. So we've got Nadav on today. So Nadav, how you doing?
I'm doing great. Very excited to be here with my favorite cowboy.
Thanks, I appreciate that. So we'll kind of dive into your background. Maybe tell us where you grew up. I know you've got sort of a kind of different background. I would guess we could kind of call it like a pivot, maybe towards the beginning of your career. So maybe give us kind of an idea of where you grew up, then how you got into this crazy world of search.
Definitely. I guess my life has been basically a series of pivots, looking back on it. But quick background on me. I'm originally from Israel. I moved to Miami when I was 10. Ended up going to University of Florida. I did my undergrad there and studied chemical engineering. My English wasn't amazing, frankly, so engineering seemed like the obvious place to go. I came back to Miami. I worked for about a year, kind of lost interest. Took a year off to travel the world, which was really nice. Ended up going to law school primarily because while I was abroad, my mom called me and told me that she's worried I'm going to become a vagabond and I need to find something to do when I come back. So I took the LSAT, did okay. I figured that if my friends could all go to law school, I mean, I could probably figure it out also. So I ended up in law school in New York. After that, I joined like a large firm in the city called Kirkland and Ellis. I was on the M&A team, working primarily on private equity deals, so representing private equity funds and their portfolio companies, buying and selling, large. I mean, nothing like what we do here. These were all like hundreds of millions and billion-dollar acquisitions. That was fun, kind of like in my late 20s or early 30s, but that gets old pretty quick as well. I left that. One of my friends from the firm actually and I were big kind of like fitness enthusiasts. He called me this idea for what became Rogata, which is kind of like a hybrid tech and retail company. That was like my first venture into entrepreneurship. We had built a pretty cool kind of like Peloton style product, if you're familiar with Peloton. Actually, the guy who designed the first Peloton bike designed our initial machine as well. It was a rowing machine. We had a prototype built in Taiwan. We also opened up a 5,000 square foot studio in New York. And then COVID came and basically put the kibosh on all of that. So I pivoted once again. I joined these two guys, kind of like somewhat famous tech founders. We're starting essentially it's sort of like an early stage VC fund, if you will, called Pareto Holdings. I was there for about 3 years. It was pretty exciting. We did a lot of early stage investments in a variety of different verticals. We also had a venture studio arm, so I spent a lot of my time on the ops side, kind of like launching these new concepts that we wanted to do. I'd kind of start off as a CEO. We'd raise some money, put a team in place, and the idea was that at some point I would replace myself and have somebody else kind of take over. Did that for a while, ended up leaving in October of 23. Frankly, got a little distracted with the war in Israel for a while. And then kind of the beginning of last year, I was trying to think of what I wanted to do next. And I guess like many other people, I read a lot of the literature. And for me, kind of like the aha moment was when, I don't remember where I read, it may have been, Buy and Build or one of these guys, where I saw this concept of buying a business for, 3 or 4x EBITDA, which for me seemed like just the craziest thing I'd ever seen. Because again, when I was doing, the deals we were doing at Kirkland, no one's paying 3, 4x on a $1 billion company, right? You're paying 8, 10, 12, 15x. So once I saw that, I knew that this was going to be the next thing. I was like, I don't understand why everybody doesn't do this. Now I understand, by the way, why everybody doesn't do it. But yeah, and then I guess you could say I started my search then, and I'm happy to dive into what that process looked like as well.
Yeah, that was an interesting background. You were right about a series of pivots. Do you feel that you were sort of trying things out, or did you, I mean, obviously your mom kind of told you to go to law school, so, we try to listen to our mothers when we can, right? But did you feel like being a lawyer wasn't for you? Being an engineer wasn't for you? I mean, did you feel like you were good at those things, but it wasn't enough? Like, I mean, have you really kind of dove into why you pivoted so much?
Yeah, I've given this a lot of thought over the years. I think it's a combination of things. One is, for better or worse, I don't like to be told what to do. And I don't really like working for other people. I think I was always, I always had good reviews at all my jobs. I think I've always done fairly well, but I think I was sort of like destined for better or worse. I'd say typically it's more for worse than for better, frankly, to be kind of like more entrepreneurial. Because I think everybody here is like entrepreneurship, the things like the sexy thing, but it's like 90% suffering, right? The 10% could be really nice and gratifying, etc. But it's certainly not an easy path. And yeah, all those jobs, like I think there were things that were interesting, but eventually it didn't feel like something I wanted to kind of like really dedicate. I never felt fully invested, right? It wasn't mine. I didn't really have a say into kind of like the direction of the company or anything like that. It was just kind of getting through the day, if you will, and working on projects that frankly weren't that interesting to me. On the like kind of tech venture side, I thought it was a lot more interesting, frankly. But kind of like where I was, the dynamic there was never gonna last long term. Like kind of like the partnership fell apart, and frankly, I gave a lot of thought into starting kind of something new from scratch before starting the search business, but the markets were down at the time. I didn't really want to go and raise more money on something that I wasn't like super jazzed up about. And like I had a few ideas, but again, nothing that I was really wanted to be, nothing that I felt so passionately about that I wanted to make that my next big thing.
Yeah, makes sense. I think a lot of searchers, you have kind of like a group that will go through undergrad, work in maybe consulting somewhere in corporate America, maybe some private equity, stuff like that. Then they usually will go to business school. Somewhere along the line, they either hear about search or buying a business, or that was kind of always in the back of their mind. So I think you kind of fit in with quite a few different people that kind of did that. So
Yeah.
when you made that decision, were you 100% in, excited? I'm gonna go find a business, and so I can do my own thing and be my own boss, or did you kind of limp into it while you were working on something else?
I was pretty open to what I wanted to do next. Like I had a bunch of people actually that I knew from kind of like the tech world, they were all working on different ideas and whatever. And there's some that I still work with kind of like either as an advisor or now not as many because I've kind of stepped back, but I'd sit on certain boards. Once I'm a kind of like an all in or all out kind of guy, right? So once I sort of like made up my mind that I was going to buy a business for 3x or whatever, that was going to happen, and it all happened kind of quickly. I probably started thinking about this around February or March of last year. And then I really started, I guess, technically, I didn't know what searching was, right? I never heard of this concept before. I guess I technically started my search like end of March, early April. And then the very first business, and I was splitting my time then between New York and Miami still. I've been kind of going back and forth for a long time. So I was looking both in South Florida and kind of like, New York metro area, tri-state area, call it. And the very first company randomly that I happened to see was Honest Abe. I found it on, I want to say through Biz MLS, which, is something that we have available to us here in Florida. I know other states don't have it, but if you are in Florida, it's a great tool. I reached out, I had a great call with the seller right away. And then the next day, I was actually flying to Spain to go look at our wedding venue because we were getting married in Spain. And Jackie Hirsch, who I'm sure a lot of people listening to this probably know, she's a great broker based out in Florida. She was the broker on the deal, her and her brother. And when I was kind of like talking to her and the seller at the time, I was like, this was great, really, like we really hit it off. I'm going to be back in a week, and let's revisit it. They looked at me like, I was like, this guy's out of his mind. So, of course and this was the first deal I looked at. I didn't know that they had 10 LOIs or whatever it is by the end of the day, right? By the time I landed in Spain, the deal was gone. So I came back and I found out quickly that it wasn't available. I was like, you know what? This is going to be super easy, right? Like this was first deal, looked pretty good. And then I started kind of searching more, reaching out to brokers. Kind of, I didn't spend any time like the proprietary side of things. Like for me personally, I don't really think it makes a lot of sense. unless you have, if you're like an independent sponsor or whatever, that's a different story. But as a kind of like a self-funded guy, I don't think it's a good use of time. So I was reaching out to brokers again in New York and down here, looked at a whole bunch of stuff, like put out some LOIs, chased a couple deals, realized that like everything else, 95% of the deals out there are just absolute garbage. And then at some point, and actually, I guess we'll get here, but I was looking for kind of like a community, if you will, because I know a lot of people in the legal world, the tech world, VC. I really didn't know anybody that's working in this kind of like searcher, like I wouldn't even call it like lower middle market. I don't even know what you call this exactly, but so I actually looked into some of the accelerators, and all kind of like the big ones, and ended up being introduced to Sam Rosati, who does the SMB Bootcamp, or SM Bootcamp, whatever it's called. He actually is a UF grad also. Apparently we overlapped there, but didn't know each other. And ended up deciding to go to Tampa for 3 days. Not so much even for kind of like the substantive aspect of it, because again, like, I've done deals before and like I knew what a QOV is, and I can like, legally structure a deal and everything else. But just to kind of like meet other people that are doing this, and it was great because essentially that's how I met pretty much my entire deal team. The guy that did my QOV, Mike German, who and Kevin Henderson, who's also in the law firm with Sam, ended up doing my deal. And it just so happened that Jackie was also there. So I walk in the first day, and like two people over from me is Jackie, who looked very familiar. And I looked at her, and it was like, I guess, a little bit awkward at first because, right, she had the Honest Abe deal that I'd lost on. And throughout like the 3 days we were there was kind of like this running joke about like, oh, Nadav, yeah, just, next time you find a deal, don't run off to Spain or whatever. It's like joke that we had. But we stayed in touch, and I told her, I was like, listen, if Honest Abe becomes available again, definitely let me know. And eventually it did. And here we are.
So what'd you like about that deal that kind of kept you interested? And I mean, for most people listening, and you've probably gotten this many times, they're almost mad at you because you essentially bought the first deal that you looked at, and there's people that will look for a year, 2 years before they actually find something. So maybe just kind of go over what really drew you to that one, and then obviously it kind of came back to you in a roundabout way, but it still wasn't too long of a search for you.
Yeah, I mean, listen, I think there's a lot of people that I know now kind of like introduced searchers to me to kind of talk about this, right? Since I've closed on a deal. And what I tell everybody is like it's super, super easy to talk yourself out of a deal. You can talk yourself out of any deal. It's really hard to talk yourself into a deal. So I think first of all, being able to distinguish between like first of all, setting up your search criteria, and this is something also Sam talks about a lot, which I think makes a lot of sense, is there essentially like three major main constraints that you need to think about, right? It's like geography, size, and industry. Like those are the three things that are going to determine, the business that you are or are not willing to buy ultimately. For me, geography, like I also got married a week before we closed on the business, which we could talk about
Yeah, we'll
separately.
get into that.
So we were like planning a wedding. That's why we were in Spain and everything. So she, as much as my wife, loves and adores me, she wasn't gonna go move to like Idaho. No offense to Idaho, right, or some random place for me to buy business. So it was really between South Florida, where we already own a place, and where my family is, and then kind of like New York area where her family is. So that was constraint number one, right? Which means that I had to be a little flexible on some other things, right? Like like if I say like, hey, I'm only looking for an HVAC business doing, a million in SDE, that's located within 10 miles from my house, I'm just never going to find a deal, right? On the other hand, if I say I look for any deal of any size anywhere in America, I'm also never going to find a deal. So geography was pretty much set. Size, at first I was looking for kind of like, the like 750 to a million. It's like the sweet spot everybody's talking of, always talks about. But frankly, like I think that's one area where, at least for me, I was really willing to kind of compromise on. And there, the big thing is again kind of like the time, like just the value of my time, right? Like the opportunity cost. I think, and I say this to people all the time, you're better off buying a business that's doing $500,000 in adjusted EBITDA today and spend 2 years getting that thing to 700 or 800 or whatever, than spending 2 years looking for the business that does 800,000, right? Because you're going to pay more money for it, and you just wasted a whole lot of time. So I was looking anywhere realistically from like 500-ish, call it. Even there were a couple of things I looked at that were slightly smaller in like the 400s, and all the way up to, whatever it is, 1.5, 2 million. Although those deals, realistically, you're not going to win those because you're going to be competing with funds and private equity guys that are going to pay 5, 6x. And then for industry, there were basically like a handful of things that I wasn't going to touch, and everything else was fair game. So for me, like, I didn't want to do professional services. I didn't want to do retail. Like, I've had experience in retail, didn't want to do that. I didn't want to do e-commerce or really anything tech, because if I was going to do that, I wouldn't buy it. I would just start it. And so that left me essentially with home services, which of course everybody loves, construction, distribution, manufacturing. Those are kind of like the big buckets I was looking at, and I was off on my search at that point.
It's a good thing to point out, like you kind of mentioned, people that get very stuck on a certain range of EBITDA, could spend a year, 2, 3 years. And as you mentioned, I mean, sometimes between that 750 and a million is kind of where I feel like a good majority of people are looking. And so the competition's much higher, which a lot of times the competition is going to drive up the multiples. Like you said, if you're looking for something under a little bit under that, probably less competition, might be a little bit easier to get. And then if you spend the time growing and getting up to that level, it's a lot faster and easier, ideally, than having to sit and fight with 50 other people that want that same listing. So that's some
Yeah,
pretty
I
good
think
insight.
I think that also there's more upside faster for you doing something smaller. So it depends on how hands-on you want to be, right? Like, if you're not really willing to be that hands-on, then yeah, you need something bigger with a big management team, etc. If it's something that's very technical, you definitely need at least one other technical person on the team, right? Like, I didn't know anything about roofing 6 months ago. Like, if I had nobody else on the team here that knew anything about roofing, or here in Miami, frankly, anybody on the team that spoke English, that wouldn't work, right? But I actually think that, like, there's a lot of value to find companies doing like 4 to 600,000 in SDE. Trying to buy them, I wouldn't buy them for 4 or 5x, but at that size, you should be able to get it for 3x, maybe sometimes in the twos. But if you can find something that's doing 400,000, you get it for 2.5x, right? You buy for $1 million, and you can make even incremental changes. Like, the upside is really unbelievable.
Yeah, makes sense. So the deal came back around. The original person that got under contract when you were in Europe ended up falling through. Maybe kind of walk me through that. And Jackie probably reached out to you. From there, how did you do your negotiations? Were you set on a certain number? Did they just throw something out at you? Let me know how that went.
Jackie reached out to me, and I don't remember if we had a call that day or the next day, but we were under LOI busy the next day, because she called me. She's like, listen, if you want to first crack at it, it's yours. Otherwise, I'm going to relist it, right? And the truth is, the seller didn't want to relist it because, it's a huge pain, obviously, to go through that process. It's super time consuming and distracts you from running the business. I didn't want her to relist it because at this point also I saw, how much garbage was out there, and I didn't want to keep chasing trash. So it all moved super fast. And I knew I had some leverage, right? Because I knew this guy just went through this whole process, and it's a little disheartening, right? It's not like he just came out of a situation where people are just like falling over themselves. Everybody's offering him more and more money. So what I told him essentially is like, listen, I'll give you the full asking price, but you need to work with me on the structure. And this is, I think, this is kind of like where my background in M&A was really helpful, kind of like understanding why structure, in my opinion at least, is oftentimes more important even than kind of like the top number. And I think people get super hung up on this top number, and because I guess that's what you're putting into your spreadsheet. But so I told him, I was like, listen, I give you full asking price. You need to work with me on the structure, and he agreed, and we were under LOI like that day.
Cool. That went pretty quick then.
Super cool. Yeah, it was fast.
So if you don't mind sharing, do you know what you bought it for as far as a multiple, or and then what structure did you put in place? And if you would go back and do it again, would you have done it exactly the same, or maybe provide some kind of advice for other people that are looking to figure out how to structure a deal?
Yeah. So what we did is essentially I bought it for about 3x, and it's a little hard to say exactly because this is a cash business, right? So they keep cash accounting, which makes, we could get into that separately, makes it everything like super complicated. Because it's really hard to figure out working capital. It's really hard to figure out a lot of different things. But according to the Q of E, SD was somewhere around the 800 to 850, depending who you ask. We ended up agreeing the purchase price was 2.7. Essentially 2.2 of that was in cash and 500,000 was on what ended up being two seller notes, as I guess you will know since you did the deal. And essentially, really, the only frustrating part with the whole structure was that initially the entire $500,000 seller note was one note that obviously counted towards my equity and was also forgivable. So essentially, right, like if the and there's some nuance here with the SBA that we can get into in terms of what you can and can't do because you can't do an earnout, but you can do a forgivable note, and you can get to very similar outcomes using this kind of tool. But it turns out that the SBA, which I know is kind of like a gray area, wasn't going to accept a forgivable note as part of the equity injection, which again, to me, doesn't make any sense because it's actually better for the business, right? Like if the SBA is ultimately worried about the health of the business, it's better for the business and therefore for the lender for these notes to be forgivable, right? Because if you don't pay them out, that's less money that has to go out the door. So we ended up splitting it into two notes. One note is still, forgivable if basically if we ended up using gross profit, the seller wanted revenue. I obviously would love to do it based off net income, kind of like what the threshold is. So we just kind of figured gross profit was a fair medium. So if the gross profit in the first 2 years falls below a certain number, then the note starts becoming essentially the note goes away in like different tranches. Since half that note, they're not exactly 50-50, but whatever, call it around 270,000, I want to say, or something, counts towards the equity. That's essentially 10% right there, right? So that satisfies the equity portion under the SBA. Of course, every bank, including First Internet, and frankly, I've never seen a bank that won't have you put in some sort of cash, required an equity injection. So I ended up putting in $75,000 in equity. And on top of that, which I thought was really nice, I hope I'm not giving away any secrets here, is that I also, ended up getting credit from the bank for transaction expenses towards my equity, right? So I had about maybe $35,000, call it, in transaction expenses. So that counted towards my equity injection. So at closing, I had to bring $40,000 to buy essentially what it was, $2.7 million business, plus another roughly $300 in working capital. So call it a $3 million transaction for $40,000 at closing. That's a pretty good. I like to think that's a pretty impressive number.
Yeah, no, definitely. I think it's funny thinking back to 15 years ago when we were doing this. Like, if I told myself, hey, in 15 years, this is how we're going to structure deals and this is how it's going to get done, I would have laughed myself out of my office. So, yeah, it's definitely changed a lot. When we're looking at those types of deals, we're essentially really, really honing in on the cash flow, how the business has performed historically. As long as those numbers look great, which they did, then we're comfortable putting the deal together that way. We also want you to have working capital. We want you to have cash reserves, make sure you're in a good position. As you mentioned, the business is a little difficult to kind of manage the working capital and trying to keep that going on, through the business. So we want to make sure you're really set up properly for that. Um, Going back to the notes, so a little clarification, kind of what happened. The SBA changed some of the rules where they were allowing for a seller note on standby for 2 years, and no balloon payment could count towards your required 10% down payment. What we were unsure of for a while was whether or not you could also add in a forgivable aspect to that note. We actually did a couple deals that way, and then our legal counsel said the SBA doesn't want you to do it this way. And the reason for it was that the way they're looking at it is if a portion of that note is forgiven, then you didn't make the full equity contribution that you're supposed to. So if you had 10% requirement and let's say, half of that or more was on a seller note that was forgivable and on standby, and then part of it was forgiven, then you technically didn't put in the full 10%. So that was the reason for it. We had to split it up and make sure we still had enough on a note that was on standby, and then another one was forgivable. So not ideal in the middle of a transaction, but unfortunately, a lot of times with SBA stuff changes kind of drastically. So it's how it
And
goes sometimes.
the seller was it was very easy to sell it to the seller because it's obviously better for him, right? So he was happy.
Yeah,
But no, it worked out. And to be fair, I kept we kept both of those notes on a 2-year standby with no
right.
balloons. So they're basically identical, right? So there's no payments on the notes for the first 2 years.
Yeah, which is great. It gets you into a good position and keeps you kind of moving along. So, knowing what you know now that you've taken over the business for several months, would you have structured it the same way?
Yeah, I think I would have structured it the same way. I think the biggest, like, if there's one thing I guess I could go back and do different in the deal, and I'm sure that this is a very common answer, it's on the working capital piece. I think that's always the hardest, because you're basically talking about it's basically purchase price, right? Like essentially you're renegotiating purchase price, and the way that it worked on this deal, was at LOI, the seller basically came to me and said, "Hey, we like working capital. We're gonna leave $350,000 in working capital. Like that's the right number." And I kind of like looked at the QOV and I said, that actually sounds like that makes sense, right? So that was kind of like the target that we were working on the whole time. As we got closer to closing, now this may have been before signing, um, we the seller got worried that he was gonna have to leave, like, a large chunk of cash in the business, and so all of a sudden kinda, like, reopened the working capital, discussion. To be fair, we were still figuring out, like, a methodology because, again, it's a cash business, right? It's really hard to say what working capital is at any given time because, they take deposits upfront, and sometimes they do, and sometimes they don't, and sometimes the project where you've done all the work, but you're not gonna show any income, right? Because it's cash if you haven't collected. On the other hand, if you collected a huge deposit upfront and haven't ordered materials or done any work, that's gonna show as revenue, even though it hasn't been earned. So that part was a little complicated. Basically, what we did was we worked through like a WIP list, like a work in progress list, and kept updating it, moving up to closing, where we sort of worked off the way that the company charges for projects, because there was kind of like a deposit up front, and then certain percentage was done after this milestone, and then at the end, and we kind of worked off that. In retrospect, like that wasn't the best way to do it for me. Like I just didn't understand, I guess, enough kind of like the way that this really worked. And some of it was because it was a little bit technical. For example, when you tear off a roof, there's like a couple pieces to it. There's kind of like the initial tear off where you rip off the old roof and then you do what's called a dry in, which basically you put in, you replace the decking if it needs to be, and you basically seal the roof. So that's kind of like step one. And the second step is whether it's a metal roof, it's installing kind of like the metal panels, if it's tiles, putting down the tile, etc. And that can also get fairly expensive because there's materials there. And they were essentially taking a deposit up front, and then most of the money was then due, the balance was due after the tear off. Okay. So at that point, you paid for certain materials, right? Like wood, kind of all the materials used to seal it, and some of the labor, but there's still a lot of materials and labor up ahead. And so when you looked at it that way, there were some projects where it was like technically it looked like they had completed, 90% of the work because they were able to collect or were entitled to collect, right? 90% of the payment. But in reality, there's still maybe 50% of the expenses are still remaining. So that was a little bit of an issue, kinda like once I took over and I understood. Overall, I don't know that we were that far out. We ended up taking out the target out of the SBA entirely. Also, we ended up doing a stock deal. I don't know if you wanna talk about why we ended up doing that, not an asset deal, that's a different story. But working capital, I think probably, and you see this obviously a lot more than I do, that's always the biggest issue, right? Like that, like I think nothing's gonna blow up your deal more than disagreement about working capital. Here was just frustrating because going into it, I thought we had agreed to it, right? Like I was aware that this will be a problem, and I thought we had agreed to it at LOI, and then it just kind of became like a bigger issue as we move forward.
Yeah, and that's something that is difficult to pinpoint up front. And a lot of times I will get an LOI, and it'll say something like, this is the purchase price, which will include a networking capital target, and that's it. So I'll immediately respond to him, hey, what do you expect that target to be? We need to be able to make sure that you've got enough working capital, and you should be doing the same thing. So when we don't understand exactly what that number is, it makes it really difficult. And as you mentioned, if it continues to be a moving target, when you get down towards the end, a lot of times it will blow up deals because the seller's looking at it going, I have X amount of cash that I'm going to take with me after settling some liabilities. Oh, but I have all this other cash on the balance sheet that I'm going to walk away with, right? And when you sort of remind them that no, you're going to leave this in the business, they get, upset because they had a certain, kind of benchmark, or they had already spent that money in their mind. And so it can be very challenging.
Right? They feel like they've earned that money because it's like, okay, you're buying business on a cash-free, debt-free basis. So it's like, okay, if I'm paying off all the debt, I should keep all the cash, but it doesn't really work that way. And again,
Correct.
that's one of the reasons also why I think going a proprietary search route is super difficult, right? Because like, let's say you found a business that the guy wants to sell, and you can even agree on a purchase price, which just to get to that point, I think is like, that's like one in 10,000 probably, right? Now you have to explain to this person how working capital works and why that purchase price that you are offering them is not the real purchase price, right? Because they're also going to have to leave money, cash or AR or whatever it is in the business. Like that's a very difficult hurdle, I think, to overcome.
Yeah, and another thing that I feel like a lot of people miss when they're looking at the deal on the front end, a lot of times they will ask the seller, how much cash do you keep on the balance sheet? And they'll say a number. Let's use an example of 200,000. Say, hey, I usually keep 200,000. I'm fine. 9 times out of 10, the buyer says, okay, so 200,000 is what I'm going to need. That'll get me to where I need to go, and I'll be fine. Let's take over the business. And what I usually do is come in and look at it and say, what else is included? If they're leaving you 200,000, that's not going to be enough, because if they're taking the AR,
Uh-huh.
or in your case, if they've already collected stuff but they haven't finished that job, they still need to order material, they still need to pay their staff, they still need to do all of these things. And the same thing with, if AR is not included, now that number that historically they've kept on the balance sheet or that they've used doesn't really apply, because that's okay if your business is rolling and you're collecting AR on a consistent basis. But you remove that, and now you're using up all that cash while you're waiting for that income to come in on the jobs you just completed. And so a lot of people don't look at it that way, and it's getting people in trouble because they figure they've got enough, but in reality they don't. And that's probably one of the hardest parts. It's hard enough to take over a business and operate a business, but when you don't have enough working capital, it's nearly impossible. So
Yeah, that to me, that's like a death sentence for a business, right? Like if there's one thing I could give people like a pearl of wisdom here or whatever, because I remember we had this conversation at the time where we are discussing how much working capital to get from the bank. Take as much working capital as you can possibly get. The bank is willing to offer you $1 million of working capital. Take $1 million of working capital. You can always pay it back, but you never know what kind of cash constraints you're going to have, or like, the one thing I can tell you is you take over a business, they're gonna think there are gonna be problems and issues that pop up that you didn't expect, right? There might be other things that you thought would be problematic that don't turn out to be problematic, but it's very hard to predict these things. And one thing that you always want to have when trying to figure all this stuff is cash.
absolutely. Yeah. It's always good to have too much, and you can always pay down your debt and, be okay with it, but it definitely leaves you in a much better position. So
Yep.
you briefly talked about switching from asset to stock. Maybe you could give us kind of a quick high level background on that and why you did it, and if you'd recommend it or not. I'm assuming you'll probably say it's kind of situational, but maybe you could explain the situation and why it made sense for you.
It's very much situational. Like, listen, I went into it, and even on the LOIs, initially said like asset deal for all the obvious reasons that I'm sure anybody listening to this is aware of. But there were a couple of things here. First of all, we deal with like 100 municipalities in South Florida. And we were and still are licensed by a qualifier. Like the seller was not the licensor under for the company. And to try to do an asset deal, which to anybody that's done it, it's very complicated just in terms of just like the administrative burden, right, of getting everything transitioned in time, whether it's like payroll, insurance, everything else. Like it's as it is, like closing is hard. I'm talking about just again like coordinating and doing all the admin stuff to get to a closing between like the seller, the buyer, the bank, whatever other payoffs you have, like the landlord, right? There's a lot of parties here that can make things difficult. To get everything to the point of doing an asset deal is difficult. And here to be able to somehow continue the projects that we were doing under the existing license while, switching entities, would have just been it would have been impossible. It would have disturbed or disrupted rather the business in a way that just didn't make any sense. The nice thing was this business has only been around for about 3 something years. So again, it didn't have like, 100 years of historical liability that I was taking over. And then from a tax perspective, we agreed, to file, I think in our case, here's a 336E election. It depends on, what kind of entity it is, but essentially to make a tax filing where the stock deal is going to be treated as an asset deal for tax purposes, right? So I still get my step up in basis and all that fun, MBA stuff.
Great. Yeah. So it's good, quick, analysis of what you decided to do. I would say from personal experience, it's interesting. I mean, I don't know how many transactions I did before. My wife bought a business and learning kind of the main reasoning behind asset and stock was pretty enlightening. Taking over a business that does deal with anything government or has contracts or has vendor supply agreements, all of
Yep.
those things when you do an asset purchase have to go back and basically redo. um, we dealt with so many different things where I had to get new credit apps, get everybody to give me kind of the same terms on your accounts payable, and it was crazy, and it was a lot of work while you're also trying to take over a business. Even had with the e-commerce business, had PayPal shut down the account because they couldn't understand what an asset purchase was. I literally had to write out an email and explain to them what an asset purchase was, give them a bunch of documentation, and they still couldn't understand it. It took months before they finally realized it. So obviously, definitely pay attention to the liability with doing an asset and stock. But more times than not, especially depending on the industry and the type of business you're in, it is a much smoother transition process. If you're essentially having the seller get out of their chair and their desk and you're sitting down and kind of carrying on from there. Of course, there's still things that do have to be taken care of and transferred and stuff like that, but it is much easier. So it made
Yeah.
sense.
I mean, listen, there's still a bunch of stuff, right? It's still like a pain. The first month here, it's like all administrative, right? Like once we
Yeah.
took over, that was like the big transition. Technically, the seller was supposed to be on for 90 days. We basically spent the first like 3 weeks just transitioning accounts and stuff, and then he kind of like went about his way. So I would say that the vast majority of our transition was really just like administrative stuff, not so much technical know-how or anything like that. But yeah, with an asset sale, like you're going to, it's very, very, very complicated. So the way I view it is like, listen, as a buyer, an asset sale is always going to be better, right? It's better for you. You just need to recognize one, kind of like the amount of work it's going to take to get there, and probably going to take longer to close because a lot of these things, most of these things, frankly, have to be done after closing. Like there were certain things that we had to do, like we have like financing partners, so we can offer financing to homeowners or whatever, and suppliers where I had to fill out new credit applications and do all this stuff, but we were able to do that after closing without just totally stopping everything that was happening. You had to do all of those things before closing and explain again to people who don't even understand really what's happening, right? Why like you don't own this business, right? But you're filling out a credit application for something that you're going to own in the future. Like it's really, really difficult. Yeah.
Yeah. Makes sense. So, all right. So we got, through the transaction. We had some ups and downs. There's a lot of paperwork, obviously. You got married in the middle of the transaction. And not only did you just didn't get married in Miami, you had to go, a 10-hour flight away, in order to do that. So maybe talk a little bit about juggling all of those things while going through the transaction, and any kind of advice you'd have for somebody that's in the middle of a transaction, or thinking about something, life changing at the same time of buying a business.
But the short advice would be don't do it this way. The longer story, I guess, is I mean, listen, timing, if there's one thing I've learned in life is that timing is everything, right? Like, I think you can work hard and you can be smart and like put yourself in a position to succeed, but ultimately, like, I think it's mostly luck and having good timing. So yeah, just to give kind of like the full picture, we've kind of been living between Miami and New York for a while now. But we were primarily in New York at the time. We were basically living in New York. And we were getting married in Spain. Reason being in Spain is because my most of my extended family, pretty much my entire extended family lives in Israel, and we wanted them to be there. And like, my grandparents are very old for them to come to all the way here would just be too challenging. And Israel's at war, so that was out of the question. So we tried to find a place in the middle. So essentially what happened was we flew out of with all of our wedding stuff out of New York to Barcelona. We were there for like a week with family stuff, did the wedding, flew straight from Barcelona. Actually, no, we had our honeymoon, which according to my wife was not a honeymoon, but we basically went to Mallorca for 2 days. I spend most of that time speaking to your team, frankly, to get like last minute closing stuff done. And so I spent our honeymoon primarily speaking to the lawyers and the accountants and the first internet team, which wasn't the most popular thing I've ever done with my new wife, obviously. And then from Mallorca, we flew straight to Miami and closed like I think it was like 4 days later. So, between, my wedding was October 22nd and we closed on November 1st. So yeah, so it was the wedding, moving, and buying the business all within, whatever you wanna call it, 2-week period. So
Yeah, it's a lot to juggle.
it was a lot to juggle, yeah.
I would venture to guess that you, maybe your 1-year anniversary will be your honeymoon, and you're gonna have to go figure something
Yeah.
out there, so good luck.
Yeah, she's definitely looking forward to, when things kinda, like, settle down here a little bit just 'cause, just to go over and learning a lot, there's a lot going on, but I think we'll get to a point where I can, take a breather and hopefully take her somewhere nice.
Cool. Alright, so we closed, took over, you were married, all that fun stuff. How did the first, kinda 30, 60 days go? Maybe give some insight to that and anything you would've, done different or any kind of advice you could provide.
Again, probably not the best time to close just because November, December are slow months, right? And no one wants their roof ripped off over Thanksgiving or Christmas or whatever it is. The nice thing is there were some jobs we were finishing up, so we were collecting, some checks, and I was like, I saw kind of like the bank account going up, but I was like, oh, this is best thing I've ever done. But then, leads start slowing down and like you're not really selling roofs, over the holidays or whatever. And like you still have like we have overhead here, right? You have expenses. The first 30 days, call it, was just like kind of like a shit show of trying to get everything transferred and like, talking to the banks and suppliers and just figuring out like who the players were, getting to know the team a little bit. I got to meet not everybody, but most of the folks kind of like in the week leading up to it. That was kinda like one of the conditions with the sellers that I get to meet kind of like, the major guys in advance, who were all, also kinda like, frankly, pretty surprised and skeptical of what was happening, but, it all worked out, and I think, I think they're okay with me now. Um so what happened was probably around, like, the Christmas holiday time, we actually flew up to New York to go, visit her family. It's like we essentially almost closed for those 2 weeks because again, all the crews are with their family, everybody's celebrating, the holidays, and we have amazing reviews. We have a 4.9 on Google, and all of a sudden I see, like, this scathing review pop up. I looked at it, I was like, "What is this?" Call the team, and next thing I know, another one pops up also from, like, these people who seem, like, super pissed about projects that I wasn't even aware of, right? I didn't even know they were happening. So, I get the team together and I started to realize that I think there was, kinda like during the transition, I think leading up to close, I think, the seller, which I think is just like a normal, natural reaction, sorta like took his foot off the gas a little bit, right? Like, let things slide. They wouldn't otherwise slide. I obviously didn't know what was going on. I wasn't even in the loop. And we had kinda like a handful of projects that became like big, big problems. And then I spent probably, like, the beginning of the year, call it from, like, I don't know, mid-December through January, on what I called my apology tour, where I was going around to all these homeowners, and, sort of explaining they're like, "Hey, I'm the new guy here," like, trying to understand what happened. There were, like, a couple of, like, we just did a bad job, right? Like, there were some roofs that were open for longer than they needed to, and they did a bad job, and there were leaks, and there were problems, and all sorts of stuff. So at that point, I realized like, I was gonna have to really that was kind of like the time, I guess, for me to like take over and kinda, like, grab this place, rein it in a little bit. So I ended up getting all of our bad reviews removed. We fixed all these problems. It cost money. Like, there were some things that I just had to go out of pocket on to fix them. We got rid of our bad reviews. We actually, one of the guys that was probably the worst of all actually called me yesterday and asked if we can go quote him another job. So that's how I know that we must have done it, because this guy was ready to, like, sue us. I mean, he was furious. And we ended up fixing it for him, and it was a pain, but we got it done. So that's kind of like my first shock, but I think to a certain extent, I think it was good, because it really forced me to kind of like get very intimately familiar with everything that's happening, and now also like my team knows that like that's not tolerated. Kind of like my philosophy, if you will, which is what I try to preach around here, and we've had multiple meetings about this, is that I take there was like a kind of like a big lack of accountability before, when there were these problems. I was trying to understand what the problem is and how we can solve it. It was very much like everybody just finger pointing about whose fault it is. And I think part of it was they had this kind of like dinging system here, where if you made a mistake, you essentially got dinged financially for it, right? And I told him that I don't want to like do the digging thing, right? I want to have an environment here where there's expectations. We're going to try to meet those. I understand if sometimes people make mistakes, whatever, but then I just want to figure out solutions instead of everybody's trying to figure out who should and shouldn't get dinged. My philosophy, if you will, is that as the guy who sits at the top here, right? I own the place, even if I know the least about roofs out of anybody here. Is that any mistake that happens here under my watch and on save, regardless of who it is my fault, right? Because only one of two things can be true. Either I didn't give clear instructions, right? In which case it's my fault, or the person who I put in position to do this job either is not the right person to do it, right? Is not the right person to follow those instructions either, because they're not willing to, or they're unable to. But either way, those are the only two options. So at first, what I told people, like, there were a lot of mistakes happening, and I didn't really, I basically let everybody kind of like slide by, right? Like I took it as a learning experience, until I got to a point where, I sat everybody down and said, listen, up to this point, I hadn't given clear instructions because frankly, I didn't know what was happening, right? Like I had no understanding of the business. Now that I do have an understanding of the business, here how I expect things to operate, and everybody has like very, very clear instructions of like, what the expectations are. And then at that point, right, if you're not willing to do that, then that's another story. And at that point, like, we had somebody that we replaced, and I think we got somebody who's done a much better job, and like things with the production side are smoother now. Like, we're taking kind of like a different approach with customers. Like our reviews have gone, really good. So it's definitely been a learning experience, and there's definitely like, as in still it's very stressful. Every time it rains, on the one hand, it's good because then people are calling you because, they need you to fix or replace the roof. On the other hand, listen, I also inherited all the guarantees and the warranties, right? This is a stock deal. I inherited everything that comes with it. Although frankly, even if it was an asset deal, you can't just call people that have a warranty, be like, hey, sorry, I actually did an asset deal, so I'm not gonna honor our warranty anymore. Um, so, it's super stressful, and especially right now, things are slow because a combination of factors. Usually, like kind of like Q1, there's like kind of this like uptick of people trying to get ahead of the rainy season here in South Florida. But now with interest rates are high, and with these tariffs, that's a whole nother issue that we're dealing with here. With prices kind of like all over the place, and the stock market, and people are a little freaked out. So it's been like a slow start to the year, but I'm very confident that I think this can turn into to something that's really big. I think there's a lot of room for growth here.
Yes, tough go at the beginning. I mean, at least you were willing to kind of take some ownership and, fall on your sword, kind of, let people know that you're wanting to be there long term, you're wanting to make it right. I think a lot of people struggle with that, right? Admitting that they're wrong, even if it wasn't their fault. So, if you a little bit of a quick kind of entrepreneurship baptism, if you want to call it that, but going from all the other things you did in your past careers to now having to apologize to somebody, a year later for their roof not being done properly, so definitely a lot of pivots there. So
Yeah, there was a lot
the
of you shit in the beginning. I'll tell you that much.
yeah, it can be challenging. So, um, I really appreciate all your insight and coming on and letting me know, kind of how your story went. I'm hopefully everything will keep moving along for you. You guys will be very successful. We'll maybe work on buying something else again in the future if you
Oh,
get
we
around to
definitely
it.
will.
Yeah. So I always ask two questions at the end. Do you have a mentor or have you ever had a mentor?
Funny that you ask. I actually have never had a mentor.
Wow.
I was actually just talking to my mom about this the other day. I was having dinner with my mom, and I don't remember how we were talking something about like my childhood or whatever. And I told her, I was like, mom, like I've never had a mentor. I think it's kind of fucked up. But yeah, I've never had a mentor. But maybe that's why now, a lot of people come to me, and even though I'm super busy, I really think it's important to kind of like pay forward. And I have people calling me every week now, like talk about certain deals or figure out, if they want to do this or, in tech or whatever. And whenever I can, I try to to take the time and see if I can be helpful. Although for anybody that reaches out to me on LinkedIn, I'm not going to respond just because I get like 1,000 messages a day on LinkedIn, and I apologize. I just can't read them all. But yeah, otherwise, people, you can give them my email, whatever it is. They're welcome to reach out to me.
Cool. Yeah, that's great. And then the final question, what motivates you?
Listen, ultimately, and I don't know how meta we want to get here, but really, this is also something I give a lot of thought to. I'm an introspective person, so I spend a lot of time actually thinking about all these things. So I like these questions. What ultimately motivates me is I don't have any kids yet. I'm turning 40 this year, and that's probably going to be the next, my next pivot, if you will. What I try to, and I tell this to my wife all the time, is like I just want to leave my kids in a position to succeed, right? And in every way. That means I want them to grow up in an environment that's safe. Like I'm a pretty active with certain like political things, right? I'm like as an Israeli Jewish guy living in America. That means that I want to be able to make sure that they have, every door open to them whenever it is they're ready to step through that door. So ultimately, that's really all I care about. And doing all this stuff, like it's fun. I like it. It's super stressful. You definitely have there are sleepless nights, whether it's this or any entrepreneurship, right? Tech, anything. But to me, that's kind of like my North Star, if you will, and everything's driven in that direction.
Well, that's great. It's got some great motivation, and fortunately, your children will have a good role model, and I'm sure you'll want to be their mentor. All of this will have to be done after your honeymoon that you owe your wife. So, everybody that is searching, buying a business, selling, all of us, we all really appreciate you coming on, talking about this, and then also, continuing to talk to other people looking to buy. As you mentioned, it's stressful. You have a lot going on, so really appreciate it.
Right. Anything from my favorite lender here. And I send a lot of people your way. Anytime anybody talks to me and then I'm thinking about searching, I'm like, first of all, let me talk to Jared, right? He'll help you.
I appreciate that. Cool. Well, we'll have to get you back on sometime in the future, and look forward to talking to you soon.
Sounds good. Thanks, man. Appreciate it.
Thank you for listening. We hope you found this podcast informative and helpful. Please don't forget to subscribe on your favorite podcast player. For more information, or if you'd like to discuss a transaction, please go to www.jaredwjohnson.com.